Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now, as usual, let's have a look on the gold market. Here is mostly the same situation as in euro currency, as actually picture barely has changed since yesterday. I mean, on the daily chart. Trend nominally remains bearish, but here we do not have any bearish directional patterns, such as, for example, potential bearish grabber that potentially might be formed, but for now, we do not have it, and that's why we actually could keep going with the scenario that we discussed yesterday on intraday charts. Since then, actually, some progress that market is showing right now on the hourly chart looks nice. So I will show you on the hourly chart. We yesterday suggested that it might be the hand shoulders. Appearing of the hand shoulders is very natural in the current situation, just because market stands for a considerable period to the downside, and considerable, of course, for hourly chart. Here, as you can see, a rather extended tendency. That's why market has to fade existed bearish momentum, and from that standpoint of view, the hand and shoulders appearing of the right arm, where market will just trying to fade the rest of the bearish momentum, seems to be quite logical compared to straightforward upward continuation. Straightforward action usually happens when market has additional drivers or suddenly appear drivers, but purely on technical bias. So appearing of the hand, shoulder, and right arm here looks absolutely natural. So what we could say, first of all, divergence that we've got here worked nice because market taking out the top, as you can see, between two valleys. So that's the usual target of the divergence. Now we do not need it anymore. Hand shoulders mostly stands in place, and now we're coming to the most interesting point where we think about taking the long position. Based on the harmony with this pattern, it seems that most probable level that might be interesting is 33. But I would suggest that, well, it might be a bit tricky to choose one from these support areas. So, because they stand, first of all, very close to each other. The difference is very small. So it might be 33.15, maybe 33, 32, 90. So all of them are actually suitable for position taking. That's why it makes sense to take small position at least around 33.15. So here we have minor ABCD pattern. If market will reach it, maybe it makes sense to take 25, 30% of your trading lot right here, because you do not know how market will behave. If it will drop further to the 33, take the bulk of your position around this level. So on average, you will get good entry right around the right arm area. It's actually our final target, what we actually would like to do. So don't be absolute performer. So don't be the perfectionist. So trying to just grab the position right and some bottom on the spike here. So it's probably this risk doesn't cost you to stay inside of the trade. So that's actually all for now. Let's keep watching what will happen today. Probably the shoulder might be completed in today's session, and see what reaction will be, because this week we will get early payrolls due to the holidays. So tomorrow it will be rather bumpy session probably based on this stuff, and just see what will happen.